Hey everyone, welcome back to Corporate Decoder, the place where we break down the complex world of business so you don't have to. Get ready because today we're diving into Armada Hoffler Properties' latest financial report, and it's a bit of a mixed bag. Scroll Armada Hoffler Properties in condensed consolidated balance sheet scroll. Let's start with a look at their assets and liabilities as of June 30, 2025. Their total assets are around $2.5 billion, which is up from the end of 24. Now, most of that is tied up in their real estate investments, clocking in at almost $2 billion after accounting for depreciation. That's a big chunk of change in properties. On the other side, their total liabilities are over $1.7 billion. A significant portion of that is their debt, which is around $1.4 billion. This is a key number to watch, as managing debt is always crucial for real estate companies. Now let's talk about performance. For the 3 months ended June 30, 2025, their net income attributable to common stockholders was about $3 million. Compare that to just $285,000 for the same period in 2024. That's a huge jump up, even though the overall net income for the company was a bit lower this quarter compared to last year. When we look at funds from operations, or FFO, which is a key metric for REITs, it was $19 million for the quarter, or 19 cents a share. That's down from $22.4 million or 25 cents a share in the same quarter last year. This indicates that while their net income looks up, the core operating cash flow from their properties might be a bit weaker on a per share basis. Then there's normalized FFO, which strips out some of those more unusual items. That came in at $25.4 million or 25 cents a share, also down from $30.2 million or 34 cents a share last year. This confirms that the drop in FFO is a real trend, not just a one-off accounting quirk. In their retail segment, rental revenues were down slightly compared to last year, and so was their net operating income, or NOI. This is partly due to selling off some properties, but even looking at their same-store results, where they compare properties they've owned for both periods, the numbers were pretty flat. This suggests the retail market might be a bit soft for them right now. Their office segment showed some growth though. Rental revenues and NOI were up compared to last year, driven by new tenants and consolidating new properties. Their same-store NOI also showed a modest increase, which is a positive sign in what's generally a challenging office market. The multifamily segment also saw revenue and NOI growth, mainly from bringing new apartment buildings onto their books and higher rental rates. Their same-store NOI growth here, which was around 3% for the quarter, is a good indicator of steady performance in the residential properties. Now, their construction business is a whole different story. Revenues and gross profit were way down this quarter compared to last year. This is because they completed a bunch of big projects last year, and their backlog of future work has shrunk significantly. Think about it like a restaurant that had a huge catering gig last month, so this month's revenue naturally looks lower if they didn't land a similar big job. Let's circle back to that debt. As of June 30, 2025, their total debt is substantial, with secured debt around $659 million and unsecured debt around $789 million. The maturity dates are spread out, but you see significant amounts coming due in 2026 and 2027, which means they'll need to either refinance or pay it down. The good news here is they report being in compliance with all their loan agreements. That's always a relief for investors. Looking at the company overall, Armada Hoffler Properties is a real estate company involved in developing, building, and managing properties. They operate in segments like retail, office, and multifamily. They also offer construction services. Their strategy seems to be a mix of owning stable properties and also engaging in development and construction, which can offer higher returns, but also higher risk. They've also been working to shift some of their debt from secured to unsecured, which can offer more flexibility. Now for the big picture, Armada Hoffler's financial results this quarter show a mixed performance. While their net income attributable to common stockholders looks stronger than last year, their core FFO is down, reflecting lower operating cash flow from their properties on a per-share basis. The construction business, which was a big driver last year, is now a drag due to lower backlog. However, their office and multifamily segments are showing growth initiatives like new tenant acquisitions and property consolidation. They are managing a large amount of debt, but they seem to be in compliance with their covenants, which is a positive sign. The company's direction appears to be a continued focus on property development and management, with a strategy to diversify its debt structure. A key risk for them going forward will be managing that significant debt load, especially with interest rates potentially staying elevated, and navigating the current market conditions in the retail and office sectors. Their ability to land new construction projects and lease up their current developments will be critical for future growth. Overall, they seem to be worth. Alright, that's our breakdown of Armada Hoffler's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.